Hey everyone, Abdel here. So April was one of the worst months in recent stock market history. Nasdaq down 13%, S&P down almost 9%. So what's going on? So as you know, we have been very bullish in 2020 and 2021, and in fact we made very out of consensus calls that turned out to be correct. We made the call for the S&P to reach 3,700 in 2020, which it did, and then 4,700 to 5,000 last year, and it finished at around 4,750. Okay. Now this year, the entire environment has changed. Things are very different. Okay, so the major issue that we are dealing with is inflation. Okay, and what's interesting with inflation this year is like not only it's high, obviously CPI is at 8.5%, but it's both supply and demand driven. So due to this inflation, the Fed has changed course. So they have already signaled that we will see a massive increase in interest rates, the Fed fund rate, but we also see it in the 10-year. The 10-year yield is almost at 3%. Okay, mortgage rates now they're at 5%. So we have seen a massive increase in interest rates over the short term. It is the other challenge for the Fed. Okay, so before they were relying that supply chain might get better, which will reduce costs and prices, but they just said recently that they will not rely on that. They will only rely on what they can control, which is lower demand. Okay, so they're gonna raise rates to lower demand, and the problem is like, look, they're walking a very tight line, because if they raise rates too fast, too quick, they will cause a recession, and if they go slow, then inflation will get worse. The second major problem we're dealing with is earning growth. So earning growth has slowed down, okay, and it's due to multiple reasons. One is when you're comparing versus last year. Last year we had fiscal stimulus and we had growth compared to the 2020 where we had COVID. This year it's more challenging. The other problem is cost and pressure on margin. So for companies, everything like costs have gone up a lot, and therefore, are they able to pass pricing or no? That's a problem, and so they're getting squeezed in terms of margin. And we have seen it recently. Let's say, for example, Amazon, they reported a negative quarter, and that's due to this dynamic. The final issue with the earnings is actually on the revenue line. So in many cases, due to the supply chain, there is demand, but look, there are no products, and so companies are not getting as much revenue as they're able to get, and so revenue as well is slowing down due to supply chain issues. We have other headwinds as well facing the stock market. One of them is, look, like China is dealing with COVID right now, and look, China has used the zero COVID policy, which has worked in the past, but now with the Omicron and its variant, it's highly transmittable, and so you see in lockdown in China, and I'm not sure this zero COVID policy is going to work with this very transmittable variants. And because of that, look, not only demand in China is going down, which China obviously is a big market, but again, supply chain, the issue is even more, and it impacts both the inflation side and the revenue side. And then finally, we're still dealing with the unfortunate and sad war that's going on in Ukraine. Look, like not only innocent lives are being lost every day, which is very sad, but the problem also is like from an economic perspective, we're dealing with inflation due to supply from both like an energy and food. So as you know, Russia is a major exporter of oil in the world, and between Russia and Ukraine, they're major exporters of wheat, corn, as well as fertilizers. So we're seeing also inflation in food due to that. Having said all of that, we're starting to see some positive signs over the short term. So markets are very oversold, sentiment is very negative, everybody is starting to talk about recessions, and the sentiment, like where we measure it, everything is negative. And so usually you see, even in a bear market, you see some rallies that are aggressive, just how we saw in the month of March, and I think we're close to that. If we're not there, we're very close, in my opinion. Over the medium term, and let's say this year, it's way more challenging. The game has changed, okay? So it's totally different environment than what we have seen in 2020 or 2021. As I mentioned earlier, the risks of stagflation, like the Fed makes mistakes, have risen. Valuation is still expensive, especially when you take into account interest rates. So it's more challenging, no questions about it. Okay, so if you're an investor, what do you do? So for long-term investors, you have to stay disciplined, okay, and then invest obviously over the long term. This actually, like a market like this, creates opportunities for dollar cost averaging. But it doesn't mean that you just have to be in equities 100%. For example, for our clients, when we saw like the challenges and the headwinds that I have mentioned earlier, we have reduced exposure with the idea of adding when things are more of a buying opportunity. And if you're a short-term and tactical investor, good luck to you. This is a very difficult market, okay? So but it creates both opportunities and risks, okay? So it's not easy, and as you can see, I lost like the hair that I had, it's all gone, no more hair. With that, thank you for your time. Hope this was useful, and don't hesitate to reach out to me if you have any questions. Thank you so much. Bye-bye.